We will now present the consolidated SPLOCI. You start with a proper heading indicating that it's the P Limited Group. It is the consolidated statement of profit or loss and other comprehensive income, and it's for the year ended 31 December 2010. Good exam technique is to start with the format. Remember, in the consolidated SPLOCI, you have a very specific additional section at the bottom of the SPLOCI where you attribute the profit of the group to the equity participants. The purpose behind the consolidated SPLOCI is to present the profit of the group as if it's a single economic entity. So you'll start with the profit of the subsidiary and the parent added together line by line, but you have to adjust for the effect of intra-group transactions so that this total column here represents income and expenses only relating to transactions with parties outside the group. You achieve that by line adding together 100% of the parent to 100% of the subsidiary. And now I really want you to focus to see how the consolidation journal entries that we've written for these intra-group transactions end up changing the individual line items. In the trial balances that you were given, there's a lot of detailed line items. It's your responsibility to group them together under the presentation line items, other income, other expenses, and in this example, we did have an instance of having administrative expenses. So you start line by line. First two lines is revenue and cost of sales. We add 100% of P to 100% of S. The amounts come from the trial balances. There were no consolidation journal entries in this example changing these line items. Now for other income, administrative expenses and other expenses, you group the trial balance amounts according to these functions. So all these amounts where there's a P or an S next to it represents your starting point. You can find these amounts from the separate trial balances. Same for finance costs and finance income and your income tax expense. Typically, when you have to prepare a consolidated SPLOCI, the way we would mark that is to give half a mark for each of the amounts as you get that from the separate trial balances. Then you have to think about your consolidation journal entries and how it would change these line items. Remember, the intra-group consolidation journal entries, they are adjusting journal entries, they are eliminating amounts from these totals as your starting point. Included in the other income of the parent was that dividend income of 21,500. Of that, 10,500 and 7,000 Rand was from the dividend received from the subsidiary. So journal 2 and 3 refer back to those. We had a debit entry to dividend income of the parent. A debit to dividend income will reduce that amount, and that is the effect of that journal entry on the line item other income. Included in the other income of the parent was the 36,000 Rand for the rental income received from the subsidiary. So we've started by adding the 36,000 and then applying the effect of journal 4. We deduct that 36,000 coming from the debit to rental income of the parent. The same is for the 12,000 Rand. The 12,000 Rand relates to the admin fee received from the subsidiary. We've started by including it in my starting point, and then the effect of journal 7 is to deduct it from that total again. Administrative expenses, the 12,000 Rand, the other leg of journal 7, takes that 12,000 Rand from the 40,000 Rand admin expense of the subsidiary, because included in that 40,000 Rand of the subsidiary is the 12,000 that was paid to the parent. Other expenses, now you see the other leg of journal 4. That is the rent expense included in the rent expense of the subsidiary that you started with, the 36,000. You started with it and then it got eliminated as an effect of that consolidation journal entry. You also see that effect on finance cost and finance income. The amounts eliminated is deducted from the starting point every time so that you are left with no amount in the consolidated SPLOCI. The reason for that is the only finance income and finance cost in this example was intra-group. Income tax and income tax expense, starting point 100% P plus 100% S. Remember, I have mentioned before that we will not change the income tax expense for the effect of the consolidation journal entries at this point. We do not have other comprehensive income for the year, and as a result, the profit for the year and total comprehensive income for the year is the same. Now, we've also written Journal 9, and the effect of Journal 9 on the consolidated SPLOCI is that we have a line item, profit attributable to non-controlling interest. We present that line item right at the bottom, and when we looked at Journal 9, I have discussed the calculation of this amount, the 50,004 Rand. When you do profit attributable to your equity participant, first do the profit attributable to NCI, and then you can balance back to the profit attributable to the owners of the parent. In this example, as I've said, we didn't have other comprehensive income, so the profit attributable to the equity participants and the total comprehensive income attributable to the equity participants will be for the same amounts. So what I want you to focus on when you look at the consolidated SPLOCI is that you start with your trial balance amounts grouped according to function. You start with 100% P plus 100% S, and then you have to be able to adjust the individual line items with the effect of the consolidation journal entries. And then a very important part of this consolidated SPLOCI is this bottom section where we attribute the profit to my NCI and the owners of the parent.